All right. What's going on, good people? You already know who it is and what it be. This is Rob P. Pasker Real Estate. New Millennium Real Estate Services for the people, coming at you live with an FYI Friday. What's going on, good people? We made it to another Friday. Thank God. I am grateful. I know for me it's been a very, very busy week, but it's also been a very productive week, so I am again grateful for that. Had a lot of successes this week, and also been shown how I can grow and be better, and that's what life is about. That constant pushing on to be better, to grow, to evolve, to be efficient, be more effective. So that's my mindset, that's my lifestyle, and I think that's a healthy mindset to have, because our time here is very limited on earth, and if you're going to be here, why not be the best that you can be, to be of service to the most people you can be. You dig? If you're in the building, you already know how I get down. I love the energy, I love the reciprocity. So if you're watching right now, shoot a comment, let me know you're in the building. If you have any questions, shoot them at me, holler at me. I got a phone number scrolling across the bottom. Call me. Call me. Let's talk about it. If you got any questions. Today we're going to talk about 4 must-haves before you apply for a mortgage. 4 things that you got to have before you apply for a mortgage. But before I go into that, I do want to touch on a couple of things that I feel are important to keep top of mind. For instance, if you're not registered to vote, get registered to vote. If your best friend's not registered to vote, get them registered to vote. If your family is not registered to vote, get them registered to vote, because the elections that we have coming up are very important, as they all are. But this one's important, and then the ones after that are going to be important, and we need to be engaged as a people. We can't complain if we aren't using our voices through the mediums that we've been given to make changes. So keep that top of mind. Get registered to vote, and educate yourselves on the topics. Educate yourself on the issues, on the candidates, on their platforms. Educate yourself on what's important to you, as a citizen, as a constituent, what's important to you, and what candidates reflect what's important to you and the way that you need to be represented. So that's one thing. And for 2, I had a couple of closings this week, and I just want to give a shout out to my clients that closed, Mr. Peterson and Rob and Autumn. I just want to congratulate them, man. They closed on their houses, and both of them had some adversity to deal with in order to make the process happen. But that's what it's about. When it comes to becoming a homeowner, it's very rare that somebody comes to me and says, I want to buy a house, and we go do it next week. For most people, it takes time, and it does happen from time to time. And those are some great clients when it does happen. But for most people, it takes preparation and time, and it takes overcoming adversity and not letting things stop you from achieving your goals. And that's what they both did. So I'm very happy and proud that I was chosen as their realtor to help them reach their goals. So shout out to them, and I wish them many, many years of peace and love and joy in their new homes. Yes, man, Mama Elsie, I love you, Mama Elsie. Yes, indeed. Yes, I know you do. And that's what it's about. We got to vote. We got to use our voices and stand up. Yeah, that's what was that, T.I.? Swing if you see me, we can throw them hands up, so stand up. Shout out to all my realtors around the country right now, just putting in that work, fighting a good fight, pushing for black home ownership, pushing for black wealth, and in our communities, on the streets, boots on the ground, just getting it. The Greater Toledo Realtors Association is organizing. Yes, we are still in our infancy as an organization, established in 2019 at the National Convention. But we're an organization of professionals that are focused on building black wealth through home ownership. And I mean professionals and just in any discipline for that matter. We're an organization of real estate agents, real estate brokers, insurance agents, lenders, title companies, anybody that you could think of, car salesmen or realtists, people that focus on building black wealth and also make money off of the real estate industry. Because the real estate industry feeds so many other industries. So if you are interested in learning more about the RealTest Mission, you can visit ToledoRealtists.org, or check down in the links down below. It says if you want to become a realtor, check it out. You can join online. The application's online. So shout out to all of y'all across the country. We got some great things rolling out here, so stay tuned for all of that. Shout out to my team. I'm working with my team to really get us to where we need to be. So shout out to all of y'all. So with that being said, let's talk about what's going on out here. A lot of people are hitting me up right now. A lot of people have been in their houses, holed up, kind of stuck in their homes with the quarantine, and they realize that their living situation is not the best living situation. It's not very conducive to the lifestyles they want to live, and it just doesn't fit who they are right now. And a lot of people are looking to make moves. But what I'm finding is I have people coming to me. For one, yes, I do have very limited rental properties, but I'm just going to be upfront honest with you. I'm only one man, and I can only work with so many people at one time. And if I'm going to work with people, I would prefer to work with people who are actually purchasing their properties, because rentals, I love helping people. I love working with people, but you'd be better suited finding a rental on your own. If you're looking for a rental right now, I'm going to tell you, if you're listening, if you're looking for a rental right now, hotpads.com has a lot of rentals. And I'll give a shout out to a couple of RealTests. Emery Whittington, he manages a lot of properties here in Northwest Ohio. So I will holler at Emery Whittington and holler at Dion Davis as well, because he has a lot of rental properties as well. But me personally, I like to focus my attention on people that are working to become homeowners and people that are looking to sell their properties. Moving on. And another thing people come to me about are rent-to-own homes. So the thing about rent-to-own, I don't deal with rent-to-own too much, and I'll be honest with you. Rent-to-own to me is like hustling backwards. It's hustling backwards. When it comes to building wealth in America, there are no shortcuts. And if you try to take a shortcut to build wealth, more than likely you're going to find yourself salty for many different reasons. But in particular, when it comes to rent-to-own, lease options, first of all, when you purchase a home, when you go into a lease option agreement, or you go into a rent-to-own agreement, you don't own the property. You don't own the property until the deed is in your name. So when you buy a house, you get a mortgage, or you pay straight cash, that property is yours. That deed goes into your name instantaneously. Wham, bam, thank you, man. Take it downtown, record it with the county. It's yours. But when you buy a house with rent to own, it's not your home. You're still paying somebody else's mortgage on the property. Yeah. And so for me as a landlord, I'm going to rent all my properties out with a lease option or rent to own, because for one, it's still my property. I'm still able to go to the bank and take out a mortgage on the property while you're living in the property. You're paying my mortgage. You're fixing it up because it's your property, right? It's rent to own. You're making payments on it for it to be yours, even though you're still renting it. So go ahead, fix it up. So don't call me about a toilet. Don't call me about, don't call me. It's your home. And I'm going to put into the agreement, maintenance is on you, even though you're still renting it. Okay. You're going to put a few $1,000s down. That's non-refundable. Yeah, you're not going to get that money back. You never see that money again. And if you miss a payment, guess what? You're disqualified from the rent-to-own or lease option agreement that we've already discussed. You got to start over if you want it to be yours. So don't miss a payment. Don't be late. And it's just hustling backwards. The National Association of Realtors did a study, and over 90% of people who enter rent-to-own or lease option agreements do not purchase those properties. They don't end up with the properties. So, on paper, yeah, it sounds good. I can buy a property. Seller-backed financing is another term for it, where the seller is going to give me a mortgage. But in actuality, I'm not going to tell you what not to do, because, different strokes for different folks. But as a consultant, as a real estate advisor, there are more safe ways, there are better ways to acquire property, and it may take more time and more work on your behalf, but it's all worth it in the end. Especially, like I said, rent to own, lease option. Why would I give somebody thousands of dollars to say I'm going to purchase this property a couple years later, when my credit is right? It might be better properties on the market for a cheaper price than what I agreed to purchase this property for, right? And I've even had clients come to me asking me to help them in their situation because they've been living in a house 10 years on rent to own, and the seller wasn't paying their mortgage and the house got foreclosed on. So all those thousands of dollars tens of thousands of dollars because they renovated the property. They lost it all because, it wasn't theirs. Don't do it. There's better ways, y'all. There's better ways out there. And what are the better ways? Get a mortgage. I know a lot of people have a stigma about a mortgage, and it is what it is. I can understand not wanting to have tens of thousands of dollars of debt in your name, but I'm going to tell you there's a difference between having tens of thousands of dollars of debt when it comes to a car, which it depreciates as soon as you take it off the lot, which your interest rate might be 15, 20% plus, versus having a home which appreciates in value, which your interest rate's only about 3 or 4% right now on it, which, every time you make a payment, it's principal reduction. So every time you make a payment, you're building equity in the property in your name, which you can borrow against at a certain point and use your house as a bank. So yeah, it's debt, but it's good debt. If you're going to have debt, why not be able to use that debt as money? Rayvon Spencer, what's up? What's up, man? What's happening? Like I said, if you want to build it right now, I know we got a nice little audience between Facebook, between YouTube, between Twitter. If you want to build it, shoot me some comments. Let me know you here. If you have any questions, let me know, man. Let's make this interactive. You feel me? But with that being said, and I didn't even discuss the tax advantages that come with being a homeowner. When it comes in America, two of the greatest tax loopholes is, for one, being a business owner, and for two, being a homeowner. Ownership. So being a homeowner, it opens you up to so many different tax deductions that otherwise you weren't available to take advantage of, such as writing off your property taxes. A lot of people come to me and say, Rob, what are the taxes on this property, blah, 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 which is, you want to be informed, but, also keep sight that you can write those taxes off when you do your taxes. So with that being said, taking on debt, it might seem a little scary, but I can assure you that it is worth it in the long run, especially if you find you a property that's in solid condition, that is in a neighborhood that is appreciating. It's hard to lose, especially when, it's your own home. When you're living in it, it's hard to lose because you're still, every time you make a payment, you're paying down that equity. So how does one go about getting a mortgage, you might ask? I'm going to tell you. Shout out to Keita Cakes, y'all. If you got a sweet tooth, if you in the mood for something, a delicacy, something sweet, something moist, something that's got some good texture, I'm talking about cake, y'all. Holler at Keita Cakes. Holler at Keita Cakes, y'all. She make these cheesecake jars, all types of flavors, and they just hit. Oh my gosh. Ooh-wee. Oh yeah, okay. But okay, I'm going to tell you how you get a mortgage. Now you need 4 things. We're going to talk about the 4 must-haves that you must have in order to qualify for a mortgage. So if you're in the building right now, let me know. If you want that info, let me know you ready. Let me hear it. Do me a favor too, and I'm going to do it while y'all letting me know y'all ready for the info. I'm going to go ahead and share it. Share this. Share it. If you're watching right now, share it. Let's get it out there for the people. Because this is for the people, man. This is for y'all. It's about Fridays is for wealth. Mondays is for the culture. Tune in on Monday nights with me and my brother Keith Keller, Jay. We go in. We have some spicy combos. We talk about relationships. The male-female dynamic, and how we can have healthy and productive relationships. But Fridays is for the wealth. We want to build. We are building, right? So all right, we got a couple yeses. Shout out to Kara Cook. What's happening? What's really good? I hope all is well. All right, let me get on to these 4 must-haves. I'm still sharing, y'all. I'm sharing it on Facebook because we got to get some eyes on this. That's what it's about. Gotta for the people. For the people. All right, here we go. So number one thing that you need, need employment. You have to have income. You have to have steady income for at least 2 years. 2 years of income, at least 2 years of income. And I mean, that could come from employment, that can come from self-employment, that can come from the government, government funds, Social Security. Child support counts as income as well. Disability counts as income as long as you have it for 2 years, and you can show that you're going to have it for longer than 2 years. So you want to have 2 years of employment. Now, if you do have gaps in your employment, it may not be that big of a deal as long as you have a good reason for having gaps in your employment. But I will say that every case is different, so this is something that you want to run by your lender when you're going through the process. They may ask you to write a letter of explanation, so don't be surprised. But a good general rule of thumb is that you want to have 2 years of income. All right? Boom, income. Well, you can't buy a house without income. Okay. Most people that are in a position to buy a house, or if you're thinking about buying a house, I'm sure you have income. This is hard to live in America without income. Some people do it, but whatever. The second thing you need, which is pretty obvious, everybody knows, you need a credit score. Now, we're in it's a crazy time to be alive, because I've seen minimum credit scores go from 580 up to 660. It's hard out here, y'all, and it's something that I'm not very happy about, because it affects us, specifically black people. It affects us because our median credit score is not that good, compared to most demographics in America. So when a lot of my clients can qualify for a 0 down, no down payment, conventional loan with no PMI with a 620 credit score. That credit score has gone up to 660. They have to have a 660 credit score. With an FHA, you used to be able to get an FHA. I would tell you 620, but some lenders will go as low as 580, 600. I've seen lenders want you to have a 640 right now. So yes, the credit score, it's got a little bit higher, it's gotten steeper, and there's no telling how long this is going to last, unfortunately. But you want to have that 660 credit score. That's the mark that you're shooting for right now. 660 middle credit score at that. So you have 3 different credit scores from 3 different bureaus. The lenders are going to take the lowest credit score, they're going to take the highest credit score and get rid of them, and they're going to roll with that middle score. That middle score is what they're going to use, and they use a certain FICO score. So if you go to Credit Karma, Credit Sesame, it's going to give you a score. Don't count on that being accurate. You want to get your FICO score pulled, and there are many different businesses out there that would do that. Me personally, I use MyFICO. I use the MyFICO app. It gives me all 3 credit bureaus every month, and it gives me my different FICO scores, because I can't even tell you how many FICO scores, at least 8, 9, 10 different FICO scores, but lenders use a specific few of them, and they give those to you on the MyFICO app. I do pay for it, because for me it's worth it to know where I stand when it comes to my finances. So the credit score is you want to shoot for a 660. It used to be lower, but hey, it is what it is. You got to swim in the waters that you in, straight like that. Okay, number 3, the third thing that you need. And if you in here, let me know you in here. Like I said, if you got any questions, I'm here for it. The third thing that you need, paper trail. You can't ask somebody to give you tens of thousands of dollars without being able to prove what you bring into the table. So when I say paper trail, I'm talking 2 years of W-2s. I'm talking 2 years of tax returns. I'm talking 2 months of pay stubs. I'm talking 2 months of bank statements. If you're self-employed, they're going to want to see 2 years of your profit and loss statements. Which, if you use a good accountant or CPA, or if you stay on top of your QuickBooks self-employed, if you need QuickBooks self-employed, holler at me. I'll shoot you a link. And while I'm speaking of apps, Kara, the app is MyFICO. It's MyFICO. MyFICO. If you go to your whatever Apple store or your whatever the Play Store, just type in MyFICO. It'll pop up, and they have a website as well, myfico.com. But going back to the accounting, if you use QuickBooks, and you keep track of it. You go through and you categorize your transactions, and you categorize your income, and you track your mileage and all that stuff. It'll spit out a nice, clean, accurate profit and loss statement based off of your bank accounts that you keep your money in. It's not that hard, people, if you stay on top of it. So as an entrepreneur, as a business owner, you can't use your business income unless you've been in business. You have 2 years of tax returns. That 2 years, you need 2 years. 2 years of tax returns and 2 years of profit and loss statements. Boom. Hey, Madam Butts, let me tell you what. Since I like that question, that's a really good question. I'm gonna just interject and answer that. How can I determine the value of my home? I know how much I owe, but not how much my home is worth. Honestly, what you're gonna want to do is get a professional to give you some comparables on your property. So it looks like you're watching right now on Periscope. You're on Twitter. You're on Periscope or Twitter, either or. I have a link on my website. I have a link in the comments as well, paskerre.com/home-report. If you go there, it'll give you a rough estimate, but what I could do personally, which I love doing, is a free comparative market analysis, it's like a mini appraisal, which will give you an idea of how much you can expect for your property in today's market. So what I'll do is after this broadcast, I'll get with you and we can set up a Zoom or set up a time to check out the property and go from there. But knowledge is power, and before you make any decision, I think, and not even just making a decision, I think just to live your best life, it's important to be informed about where you stand personally, because you never know, what you're sitting on right now. Okay, so I appreciate that. Moving on, the fourth thing that you need, you want to have some cash reserves. So there's not really a number that you want to have. It all depends on who you are. It all depends on the price range that you're looking to purchase in. It all depends on your credit score, your financial profile. It all depends on the type of loan that you're going to purchase with. So it's kind of tough to say, but a good measure that I like to say is you want to have at least a month worth of expenses saved up. So if you look at your budget and your budget is broken down to $4,000 in your monthly budget, and that includes your food, that includes your clothing, that includes your entertainment, that includes utilities and housing. You want to have at least $4,000 stacked up in your savings account. Now you might be able to buy a house with less than most people can buy a house with less than $4,000 stacked up, but I just say you want to have a month worth of expenses stacked up, because just when it comes to financial stewardship, it's important to have at least a month of your monthly expenses stacked up, if not even 3 months. You really want to have at least 3 months to be truly secure. Maybe even more depending on if you're self-employed or not, or what assets you possess. But I've seen people purchase a home with $1,200 in the bank, $1,500, but I think just for stewardship, you want to have at least $4,000. You want to have at least a month's worth of monthly expenses stacked up. That's something that I would suggest that you speak to a lender about before you apply for your mortgage. Because I can honestly say the more money that you have in savings, or even 401k counts, because you can use your 401k to purchase a property without penalty. So hey, think about that. But that's just something you have to visit when you get there. But the more money that you have stacked up is going to be less risk to the lender, which is going to give them a greater chance of approving your loan. So boom, there you have it. And just in recap, the 4 things that you want to have before you apply for a mortgage. You want to have your credit score. Say 660. Unfortunately, it's gone up, but hey, it is what it is. People are still purchasing properties. You also want to have your 2 years of income on paper. That's really 2 things right there. 2 years of income plus the paper trail to prove it. And then you want to have your cash reserves. So I know I'm not going to lie to you all. I've been very overwhelmed working to create leverage in my company, in my business, by building my systems and bringing people into the organization. So if you've reached out to me recently and I haven't been responsive, I apologize. It's not my heart, I can tell you that. But trust and believe, I have some systems in place that if you work with me, I can work with you. So there's a link down below. It says Real Estate Success Now. You click that. That link is going to take you to a page where you can say what day and what time is best to talk. And I'll reach out to you and we'll figure out what we need to figure out. If you need some home ownership counseling, I can do that for you. Yeah. Your boy is going through and getting his HUD certification so that he can give you your home HUD HUD certification for your down payment. If you need some down payment assistance and whatnot, you can get it directly through me, through the National Investment Division of the National Association of Real Estate Brokers, through NARAB. So, we're starting up our training this week. We have some homeownership counseling workshops coming up virtually that I want you all to really tune into if you're interested in becoming a homeowner, and it's also going to help you qualify for down payment assistance. So, like I said, hit that link down below. Let me know what's the best time to get in touch with you, and we're going to work it out. If you're interested in selling your home, again, there's a link down below which will give you an idea of what your property is worth, and then I can give you the details from there. And if you're interested in fighting a good fight to build black wealth through homeownership, there's a link below, and that's what it's all about, creating a foundation for ourselves financially, so that we can not only lift ourselves up and change our lives and our families' lives, but also change the lives of the people around us and make our community the best it can be. Why not? Like I said, shout out to my guy Rob Scott. He said, hey brother Rob P, it's been one hell of a journey and back. I truly appreciate your brotherhood and companionship. Hey, look forward to working with you in the near future. Much love. Yeah, hey Rob, I'm gonna tell you what. We got your crib. Now, we're gonna let you get settled, get the crib together, and now, once you get that together, we're gonna elevate. We gonna elevate, man. We gonna talk about it, man. We gonna take it to a whole nother level, man. Cause Rob is an inspiration. Rob is an inspiration to me. As one entrepreneur, as one black entrepreneur to another, as one business owner to another, man. Rob is an inspiration. So, somebody that I've worked with, and we had some success working together, in a broker client relationship. But, my relationships when I work with a family and help them into home ownership, especially when I work with them over the course of months, or in some cases over the course of a year or two, we become more than just clients. It's friends, it's family, and for me to be able to pour into somebody and help them change their lives and to have that impact, that's something that I live for, because I want to be able to touch the people around me and help them elevate and change their lives, and to have those people trust me through that process. That means the world to me as well. So I'm always looking to build more relationships, and I'm always looking to be better. So I could go on and on. I got so much stuff, but I'm gonna leave it at that, But I appreciate you all for tuning in. It's been real. It's been fun. It's been real fun. How about that? This is FYI Friday. You know where to find me, Rob EP, in the place to be. Stay tuned. Monday night, we coming at you with some real talk with Rob P and J. Rob P and Keith Keller. We going 9 o'clock. Be there or be square. And don't be square, because nobody likes squares unless we playing Legos. You dig? All right, y'all. Peace. I hope y'all have a great weekend. If you know something that's popping that I need to check out this weekend, let me know, because I'm always looking for something for the weekend report. All right? Peace.